All right. Good morning. Tuesday morning. So, you know what? First things first. Let's take a quick look at the news. See what we got out ahead of us. We got durable goods orders at 8:30. If those orders come down a little bit, might be good for the market. Show a little effect of the Fed fund rate tightening, the market coming down, stealing a little disposable cash from the consumer, and the cost of oil. Really, cost of gas and oil. I think is going to have the biggest effect on the consumer and consumption because yeah, the average individual, you start sucking an extra $25 a week out of the pocket. That's 100 a month. That's probably a night out. That's a night out or a little something something for the kids, and that'll start having the effect that the Fed is looking for. So we'll take a look at those durable goods orders at 8:30. Look at the effect it has on the market at 10 o'clock. New home sales. They want to see that come down a little bit. Consumer confidence. We can back off of that a little bit, and these will be good signs that the economy's slowing down a little bit. We have a good, strong job market, good labor market, also adding to inflation, but it also demonstrates that we have a good, strong economy. We can handle these interest rate hikes. We slow down the cost of goods a little bit, and we're looking peachy. And then 4:30, we get the API oil report, which is kind of on everybody's mind nowadays. So we look at the market, and let's just take a quick look at the S&P. The S&P, we're coming off a daily hammer. We created a daily hammer. That's a nice return and a nice buy-in yesterday into the close. And we got some high-tech companies coming out and things like that. And what we want to watch for is, I think it's Microsoft today. We want to see these companies move the market up higher. If these companies don't move the market up higher, there is no catalyst out there to do it. It's going to be very disappointing, and we could be entering that bear market that I think it was J.P. Morgan was talking about. Excuse me, coffee break. So we're looking at that hammer now. If we go to the futures, right? Here's the hammer on yesterday's daily, and you usually don't get a V bottom. And if you look at the 240s, you can see we hit that bottom and took off. And here's the return. That's what we want to see. We want to see a little pullback that fell and then a break. So we're bullish on the daily hammer, pending now a break of last night's high, and that's what we're going to look at. Hopefully, we could pop that high, and without too much pain to the downside, and be in a nice bullish trade for the day. So we'll take a look at it. Really, what am I looking for? I'm looking for like 436. 43.36. That's really about all I think we're going to see on the daily. 43.36. That's what it looks like across the board. So we'll see. Um, and let's take a look at the other one, the bonds. Okay, so we got that pullback, and we've been looking for a good pullback, and I think it's going to continue. The momentum is down, and looks like we might be putting in a double top to test this gap right here that usually forms a little resistance. So I'm looking for the interest rates to pull back, which means TBT should pop back up a little bit. We're doing pretty well on that. That was a nice move. We got in at about 15. At 17, we were buying it, the $15 range, $17 range. Probably, I want to say probably about a year ago. I mean, I'm not looking at the records, but it feels like it was almost a year ago, if not maybe 9 months or 7 months. It's not a bad move. And I'm not really looking at the commodities. Let's look at home builders. I was messing with that a little bit. See if they're bottoming out. Yeah, they look like they're bottoming out. It's starting to lose momentum, turn around. That's good. All right, I'm not going to keep you any longer. Right now the futures are down 11. We got plenty of time, man. It's only like 6:30. Like I said, we're going to look for on the S&P. When we're watching the S&P, we're just going to watch for a break of that hammer. But if we're clocking the futures, which trade through the evening, we see the hammer right here. We're waiting for a break of the hammer on the daily. But this is what we expect on the futures. I'm looking at the 120s right here on the futures. Let's see what the 240s look like. You know what? We got it right here. We don't have to change anything. Here's the 240s. 240s look the same. So the 120s and 240s are setting up the same picture. We want to break it that high. So hopefully we get ready to do that into the open, which is 302 on the futures. And again, we could probably just clock that on the break of the high on the S&P. So much shit on my chart. Can't even get it the data to pop up. Data. The high. 42.99. That's what we're looking for, baby. All right. So remember, everybody, calm, cool, and at peace when you're trading, and good luck with your trade.